It's Brian Preston, the Money Guy.
All right, Kevin M. asks, what retirement saving options are there for stay-at-home moms with minimum personal income? He's asking because he's currently maxing out all of his tax advantage accounts and her spousal IRA. So what else should they be thinking about?
Well, gosh, Kevin just answered his own question with the question because... I mean, the first thing I was thinking, I was like, man, it's a great setup, Kevin, because one of the things I think a lot of times couples don't realize is that in addition to the working spouse, because it sounds like Kevin has a working spouse, a non-working spouse, is that the non-working spouse can actually use your earned income to fund their own Roth IRAs or traditional IRAs. Take advantage of those things because that's a huge benefit. Outside of that, it's one of those things where if your spouse, because it's not uncommon for, and Bo, you're going to be able to add a lot to this, is you can have a non-working spouse that decides, you know what, I've got some extra time, the kids are getting older, I want to start side hustling, and that side hustle could turn into a very good career. Sure. That opens up even more opportunities, so you have to kind of evaluate where that spouse is and if there's an opportunity to side hustle, because that does open up more opportunities.
Yeah, the big thing that you can do is the spousal IRA based off of your earnings, right? If your stay-at-home spouse doesn't have any earnings of their own, it becomes much more difficult. Now, it becomes more easy for them to save for retirement if they actually go out and have their own earnings, whether there's like a small family-owned business and the spouse works inside the business, or perhaps they start doing some other vocation. There are retirement opportunities like SEP IRAs or solo 401ks or that sort of thing. But absent that, it's okay. If you've exhausted all of your retirement savings vehicles and you're maxing out your 401k and you're maxing out your Roth and you're maxing out her Roth and you're maxing out your HSA, there's nothing wrong with just opening a plain old after-tax brokerage account and starting to save dollars in there. Yeah, you might not be getting a tax benefit from it, but you are building up that third bucket. And that third bucket, when you get to financial independence, can be tremendously valuable. So while you might not have any other mechanisms to save taxes today, that's going to give you a lot of opportunity later on in life to potentially save taxes. Because imagine if that third bucket is built up nice and big, and you retire before age 72, you might say, man, okay, here's what I'm going to do. We're going to live off that after-tax bucket, only pay, long-term capital gains on the stuff that we're selling, and we're going to start a Roth conversion strategy from the time that we retire until the time we get to 72 and start turning all of those pre-tax dollars that I was able to accumulate in my 401k into Roth. And it's going to give you tons and tons and tons of flexibility. Don't get down like, oh man, I wish I could save more in retirement in her account. It's okay to build up those after-tax buckets and just kind of deal with the hand that you've been dealt financially.
What I love about your answer, Bo, is that it's almost like a lot of forethought and a lot of experience went into developing the financial order of operations.
Something
because
like that.
Exactly what Bo just covered is why there is a graduation point. Remember, go to moneyguy.com/resources. You can download the 9 steps. Why do you graduate from 5 tax-free growth with the Roth and HSAs of 5, 6 max out retirements, and then of course 7 hyperaccumulation? Everything Bo just talked about with that after-tax, the 3-bucket strategy is covered in hyperaccumulation, especially in the course that we have at learn.moneyguy.com. That's what I love. I love when things are affirming and it tells you there is a proper financial order of operations. Make sure you know what to do with your next dollar because it can help you maximize to let your army of dollar bills work harder than you can with your backs, your brain, and your hands. It's just very affirming to hear that.